What's going on, everybody? This is the blockchain backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart along with the altcoin market, how we're progressing along over here on Bitcoin compared to things that we've seen in the past, along with how well the altcoin market did, finding its support, which on Monday scared the market, and then now, of course, getting right back to where we were to start the week out. But of course, the biggest news out there going on in markets in general is a brand new, fresh all-time high here for the Dow Jones Industrial Average. So we're actually going to spend some time talking about this because, as you all know, and it is unequivocal, which means it's not debatable, it is not an opinion, it is a cold-blooded fact that bull runs in crypto, new all-time highs in Bitcoin, they all require one thing: this guy going into new all-time highs. So all over Twitter and X yesterday afternoon, I'm getting tagged and stuff. Are we going to all-time highs for Bitcoin? Are we going to all-time highs for Bitcoin? We'll talk all about that in this video and the nuances with it, the things that we're going to be looking at now moving forward, now that we have a new all-time high here for the Dow Jones Industrial Average and having a bigger context view. The things that will certainly be out there in the headlines and what retail investors will gravitate towards is the fact that, one, it is an all-time high. That means that we will see lots of financial media coverage of this. Two, the Fed yesterday stated that recent indicators suggest that growth of economic activity has slowed from its strong pace in the third quarter. Job gains have moderated since earlier in the year, but remain strong, and the unemployment rate has remained low. Inflation has eased over the past year, but remains elevated. As we went through the live stream of this yesterday, the things that were very different throughout the whole thing, in which if we go from here to here, there's nothing different. It's all right here in this first paragraph where they said, recent indicators suggest that growth of economic activity has slowed and inflation has eased. This has definitely increased optimism of rate cuts. Heck, even the Fed said that we will be getting rate cuts in 2024. Even for our next meeting right now, the way it's priced out is that there's an 81% probability that we are paused and a 18% probability that we will cut. This, of course, has sparked absolute euphoria over there on Twitter because, as we can see, the market is now pricing in rate cuts much faster than it was just a couple of days ago. So we have a lot to talk about, and we're going to really focus just right here on crypto really quick, but then we're going to have to zoom out and talk about this stuff over here with the Dow Jones. Of course, we'll tie the altcoin market into this, but really, if you watch this channel frequently, none of this should really surprise you of what you do see. But of course, it's more of like a little bit of a reality check in the thick of extreme excitement. The first thing is, of course, we've been watching Bitcoin all year long. We've been bulls on Bitcoin since the bottom. While the world screamed for 12K, heck, even just 2 months ago when everybody was screaming for gloom and doom, we were a little bit spicy, stating that the bears were going to be getting left behind in epic fashion right here at these lows. Market rallies up and goes. And if you've been catching videos recently, we of course have been now overlaying the stock market on top of these charts as we study 2023 versus 2020. The price action's been the same. The retail investor sentiment has been the same. We watched the whole washout. We watched the whole toxicity come back. That's exactly what we did in 2020. And things we know is that in 2020, when Bitcoin finally was going into its all-time high, what was it accompanied by? It was accompanied by the Dow Jones Industrial Average breaking out into new all-time highs, as it typically is accompanied by. We can look back here in 2020 and see the day that it ends up happening is right here on Monday, November 9th of 2020, which is right here, Monday, November 9th of 2020. So price action has certainly been very similar. And you guys know it. We've been putting the NDXT on here to show, wow, we actually even behave the same in here when it comes to the NASDAQ 100 technology sector and in regards to Bitcoin. If you remember just a couple of months ago, Bitcoiners really screaming that, look, wow, Bitcoin's rising while the stock market is falling. We actually saw that exact same phenomenon happen right back here in 2020 as we head into this moment. So price actions are all similar. The Dow Jones, it's now touching an all-time high. That's like exactly what was going on here. Now it's happening here as we come out of this craziness from down in here. Just an absolutely confluence of events that are actually taking place in here. And well, the altcoin market still just continues to hold its strength in here, trying to get itself back up to retracements or more. But the $1 million question here that I get asked all the time is, there's the all-time high. Does that mean that Bitcoin is going into an all-time high? We can look to this past behavior and say all of these elements were very similar in 2020 to 2023. We know that it's mandatory for the stock market to set a new all-time high. We do know there are cases where we can spend years in ranges and escape and set a new all-time high, but Bitcoin doesn't do it. But is one of the mandatory elements there for Bitcoin to do it? Yes, that element is there. And we see the price behavior acting very similar to what happened last time that it did. Now, there's a lot of nuance that comes with this. So before you get too excited and say, BCB said we're going to new all-time high for Bitcoin, there is a big nuance to it. And that is exactly this and what happened to Bitcoin back in here. And that there are times where the Dow can go into the all-time high, but Bitcoin doesn't follow. It's no question that in order for Bitcoin to break into a new all-time high, it's accompanied by the Dow Jones. The three major bull runs that we've had for Bitcoin from 2013, 2017, and 2020 to 21 all took place within 56 days of the Dow Jones Industrial Average able to hit its all-time high after spending years consolidating. As we can see over here, once the Dow finally leaves, and as we can see over here, once the Dow Jones leaves and they peak 30 days apart from each other. And then again, as the Dow leaves, it sends Bitcoin off on its rampaging bull run. All three bull runs have been accompanied by the Dow Jones breaking out into new all-time highs. It is a mandatory element for every bull run that Bitcoin has had. Now, in a new all-time high, which as we can see, these things can get wobbly back at the all-time highs. And just because you're through them today doesn't mean you're going to be through them tomorrow. But with it through the all-time high, that element is now matched. It doesn't answer the question of will Bitcoin go into an all-time high, but it does say there's a particular condition that is always mandatory that has been met now. And the bigger question is this the start of a bull run or is this an event like this? And that this is not the start of a bull run, but more so of a short squeeze to new all-time highs that eventually will let go of itself, as we saw here back with C19 and as we saw over here prior to the great financial crisis, that these things broke out into new all-time highs, but they were fake outs that eventually led to big crashes and big recessions, right? So let's talk about that for a second, and let's talk about how high we are with the Dow Jones. We know we're awfully close to a 4.236 Fibonacci extension, and that the peak that was set back there in late 2021, early 2022 exceeded the 3.618 extension, the big pull down, the most Googled for recession in history, now going back up higher. If you remember, this is very similar to what we saw for Bitcoin and for Ethereum in 2021. As we all know, in November of 2021, it did not signal a bull run for the entire cryptocurrency market, even though Bitcoin and Ethereum did go on and set new all-time highs. Another thing to pay attention to here is just how high we actually are with the Dow. And we can go back and look at things like the Great Depression and see how big this was before it collapsed. I'll copy and paste this thing for exact size to see that I have not modified this. And I will shift it over here and overlay it exactly where we are in the stock market right now, so you can get an idea of how high this thing has gone. I won't even look at the top of it. I'll just start us at the bottom of where the great financial crisis happened at, which we could see. The bottom comes in here. We'll start us right at the very bottom here. So it's as if we've done the same thing in here where we have this broadening wedge with higher highs and lower lows, just as we did prior to the Great Depression, just as we did heading into the Roaring 20s. And you will see that the exact size of the bubble that was printed for the Roaring 20s was exact same size as our 4.236 extension shows here for the Dow Jones Industrial Average. So the last time we printed a bubble of this magnitude in here, it marked the actual end. So this was not the start of a continuation of a bull run, but more so was a blow off top ending to the stock market when we had gotten this high this fast. Another thing about it is just the actual structure that has happened here for the stock market with how high it is, knowing we're so close to a 4.236 extension that the fall of 2022 takes place from above the 3.618 extension. That's exactly what we saw in Bitcoin. Then it goes on and hits it. That's what we saw over here in Ethereum. Then it goes on and hits it, and then things fall apart. And so when we get a new all-time high, the first thought is we are in a brand new bull market. And if you remember, that's exactly what the thoughts were over there for Bitcoin and for Ethereum during this time. I was chastised like crazy during these time periods because I was selling my Ethereum. I had already sold my Bitcoin up in here, and it became a mockery to be a bear on Bitcoin at the actual peak. Right now, the narrative is going to be the same. How could you do it? The Fed is entering into a cutting cycle. Money is going to be printed to the heavens. How could you not think this thing is going to go much higher? Again, this is what distributions at tops can look like as they get above the 3.618 extension. We've talked about this for way over a year. I'm having to explain it because I assume there are some new eyes looking at this. But in distribution, you could set a new all-time high, but things not be okay, as the Fed is hinting at by saying recent indicators suggest that growth of economic activity has slowed. But it doesn't matter, right? Rate cuts, we're going to the moon. Well, we can actually look at the last 3 cutting cycles for the Federal Reserve and see how the market has reacted to that. We've looked at this too. We've talked about it many times. As long as we're in the pause period, that historically has been okay for markets in here. And that's what we've been in here. So things have been a little more comfortable while we're sitting in a pause period. But we're hinting that we're going to be cutting in 2024. The market's pricing in 6 cuts. The Fed said we're doing 3 to 4. That's bullish, right? Yeah, let's go back through history. We talked about this period right here. This is one of those times where the Dow sets the new all-time high, but Bitcoin doesn't follow. As we showed in here, Bitcoin does not escape into a new all-time high during this breakout of the Dow. Why? Because the Dow is not going into a bull run. This is more of a short squeeze, right? Double tap, bull flag, breakout, short squeeze, violent back test. This is a short squeeze. This is not the start of a new bull run happening in here. Also, all the way up in here in the 2017 bull run, don't fight the Fed, right? The story of 2022 and 2023, right? As you could see, we were in a hiking cycle in the 2017 bull run. But then we got into pauses up in here, and we actually do set a new all-time high up in here while the Fed is paused. The Fed initiates a couple of cuts, we get the short squeeze, and then everything completely falls apart. If we go back to the great financial crisis, what happens in here? We enter into a pause, which right here is our last hike, and we pause all the way to here. As you can see, the market breaks into new all-time highs here for the Dow Jones during the pause period. We are paused all through here. Dow breaks through all-time highs. Then finally, the Fed starts cutting from the actual top. There's one more little rally after the first 1 or 2 cuts, but then everything completely hits the fan. As you can see here, back in 98 and 99, what do we have? We're having the dot-com bubble, right? We pause, everything is still fine in markets, the big cuts come in, and then we enter into the dot-com bubble, right? The dot-com bubble pop. Hiking cycle, markets rise. Pause period, markets break into all-time highs, cuts start, market falls apart, right? Bull market into hiking cycle, cycle pause, market rally, couple of cuts, final short squeeze, everything hits the fan. And so what ends up happening here is the exact same thing that we've just witnessed, that we enter into these ranges, the Fed pauses, we break into new all-time highs during the pause, they initiate a couple of cuts, and there's like this short squeeze that happens, and then everything hits the fan. And that's the same thing that happened back in here prior to the great financial crisis. Hiking cycle, they pause, we break into new all-time highs in the pause. Cutting cycle starts. When cutting cycle starts, it marks peak, right? They start right here. There's actually one more little tiny rally right there, and then everything hits the fan afterwards. And when they're in this cutting cycle in here, what's this insinuating? The dot-com bubble is popping, right? So entering into the actual cutting cycle isn't bullish, which if you go onto Twitter, that's what it's going to tell you. The Fed is pricing in 6 rate cuts in 2024. Excuse me, they're pricing in 3 rate cuts in 2024, but the market is pricing in 6. Excuse me, the market is pricing in 7. You'd be hard pressed to find that 7 rate cuts is bullish for the market, right? A lot of misinformation throughout 2022 and 2023 that if the Fed's in a hiking cycle, that you don't fight the Fed. We had to battle this tooth and nail to just show this chart simply to say, look, when are hiking cycles bad? They're not. But the market actually believes that the cutting cycle is the good thing. It's the most amazing phenomenon out there that the market thinks the cutting cycle is the bullish thing for the markets. What typically ends up happening is we start cutting, the market absolutely hits the fan, and then they cut rates down to next to 0, and then we find a bottom afterwards. But the actual starting of the cutting is not the beginning of a bull run. It's not the beginning of a bull run, and it's not the beginning of a bull run. But what always happens in here is during these pauses, especially our last 2, we pause, we break into all-time high, One last push, it falls apart. We pause, we break into all-time highs. They start cutting. There's one last push, it falls apart. And right now, what are we at? We're at pause, break into all-time high, and we're almost at a 4.236 extension. So this is the big complication of this market right now in understanding that. And like, even if you remove all like fundamental analysis of just saying, hey, look, this is rate cuts, this is everything, blah, blah, blah. It's just really as simple as saying, look, we're almost at a 4.236 extension, and this is exactly how high we went during the roaring 20s before the Great Depression began. And we even witnessed this exact same thing happen for Bitcoin and for Ethereum in 2021, that they exceed the 3.618 extension. Big fall. What happens? Everybody's screaming, just admit it's a bear market. Everybody capitulates from the market, and all the laser eyes and diamond handlers leave in the summer of 2021. The market rallies into new all-time highs. Retail sentiment becomes convinced that Bitcoin is going to $100,000 and that Ethereum is going to $10,000, only for it to reject at the 4.236 extension and turn over and be game over. But what you definitely see right now is full-blown conviction over there on Twitter. This is the beginning of the greatest moment of our lives, right? And maybe it is, right? But the data, like the technical analysis and the behavior of the Fed, which everybody is pointing to, is saying, hey, it's the Fed that causes this. The Fed's going to be cutting. Like, they clearly communicated they're going to be cutting in 2024. This is not like the market just like anticipating and betting against the Fed and saying, nah, you're going to cut. No, they legitimately said they're going to be cutting in 2024. The market says, you're going to be cutting a lot in 2024 is what you're going to be doing. But this tends to mark the end of these moments. It is very common, as we've talked about for over a year, very common for us to break out in the pause period. The pause period is typically a bullish time in the markets. It's just being prepared that when those cuts come, which they're anticipated to come pretty soon, we're talking just a few months from now at the start of them, what happens when those cuts actually end up happening and where we are and the distribution structure we've created in here. For example, if you do look at what Bitcoin looked like at the actual top, and you do look at what the Dow Jones Industrial Average looks like right now, they're essentially the same thing in here, that you have the same behavior, the same crash. Everybody believes that Bitcoin is dead here in the summer of 2021. All the retail laser eyes and diamond handlers leave. This is the most Googled for recession in the history of all time. You may say, well, nobody was really using Google back in 2000 or in the great financial crisis. Yeah, but they were using it in C19. Double the amount of searches for recession during this time period than during C19. What does the market do? Rallies back up, and then take a look at what's happening in here and how this peak of Bitcoin did come in here as it goes into the new all-time high, how aggressive this push to the all-time high was. Then take a look at what the Dow looks like right in here and how aggressive it is as it's pushing back to the all-time high. So obviously looking at it from this aspect, it's like, ugh. And it kind of is, but at the same time, it's also like that exciting time too. It's like the mix of both, like looking at it from like the short-term aspect of, wow, this is actually a really, really exciting moment. This is where blow-off tops can happen. Excessive euphoria, irrational exuberance, extreme risk-taking usually takes here. And everybody is convicted that this thing is going to rampage to the highs, into the heavens, and that they just plow their money into it. And if it is kind of a slower top, like we saw over there for Bitcoin and for Ethereum, rather than something so aggressive like the Great Depression, well, then it would buy us months, right? That's all you needed in here, right? The whole bull run for the cryptocurrency market, it really just takes place from like December through March. Yeah, it takes us a while to roll over and top there at the peaks, but really the majority of the moves in the market all happen within, 3 to 4 months. That's all you really need in crypto for things to move really fast. And so we have these elements kind of lining up in here in the stock market and with the cryptocurrency market that are favorable, but at the same time having to have that bigger view in here, and this is my bigger view for sure, of just kind of where we are, and that new all-time highs are definitely fun. They're the elements that we've needed for Bitcoin, but being mindful of just where we're at. We know we did it exactly like this for crypto back in 2021, and we know that retail sentiment became irrationally exuberant, irrationally euphoric here at the peaks. And all you have to think back of is 2 months ago. They were all screaming, we're going lower. 2 months ago. Then it flips to irrational exuberance. And that's what we would have expected here because it's exactly what we had back in here. And well, if it's slower, if it's a couple of months and it's irrational exuberance and extreme risk-taking and euphoria, let's go. That's good for crypto. But if we're going to use the past to give us any kind of indication on how markets behaved, it tells us that we really only have the next several months to be keeping our eyes open for when things actually do start really falling apart. And if we kind of go based on what we just saw there with rate cuts and when they actually end up happening, like over there with C19 and over there with the great financial crisis, right? Things didn't start falling apart till anywhere between 2 to 3 rate cuts later. So if we don't have a rate cut here in January, but then we have one in March and then we have one in May, that gets us at 2 rate cuts there by May. And that's just the current pace we're going at right now. And it looks like we're now back to projecting 6 rate cuts. But if we want to use rate cuts as any type of indicator, rather than being like rate cuts mean that we go into a bull run, what if we actually just say, here's what happened the last 3 times we had rate cuts? It's that it gave us a clock that started ticking down. And that tick down, as it stands currently, gets us into like May or June or early as April. And well, is 4 months enough time for something absolutely nuts to happen in the cryptocurrency market like we saw back in 2020? Sure it is. There's November 9th. Here's 4 months later, all the way there. There's the altcoin market during that time, rampaging right along. So is 4 months enough time for something crazy to happen? And does that align with what's been happening here? Sure. But the clock is ticking, and we're getting dang close. So we'll keep our eyes on it. We'll see if things start moving faster. We'll see if they move slower. But a condition has been met. The question still remains, will it be a moment like this or just a moment like this? But so far, it's behaving exactly like it still has behaved from 2020, not only in structure, not only in stock market, but then we get the breakout into all-time high for the Dow Jones Industrial Average in the same structure that we did here in 2020. So definitely exciting and definitely something we'll be keeping our eyes on every day. Because even with the NDXT, or the NASDAQ 100 Technology Index, which we've been watching closely with perfect distribution structure, this is what the next phase was. We have confluence of the NASDAQ at the 4.236, confluence of the Dow Jones at the 4.236, and confluence of what distribution actually looks like here in the technology sector of the stock market as well. But we also have confluence of exactly how Bitcoin has behaved when this actually occurred back in 2020 and how the altcoin market behaved. So we'll keep our eyes on it every day. We've now entered into a new phase of markets. It's both exciting and nerve-wracking at the same time, but we'll be here together for every step of the way. And so on that note, we'll go ahead and wrap it up. Congratulations to those who were here together. We were all here together when we saw it breaking into the all-time high during the live stream yesterday. Here we go. It's happening. But all right, I'll see you guys tomorrow. I want to thank you all so much for watching. Of course, you guys could check out bcbacker.com for over 40 videos and 11 hours of content from me. I do also write a subscription-based newsletter over here on Substack. In the next 24 hours, I will be publishing the 4th of the series on altcoins in 2021. And what's really interesting about all of this, and how, for those who have been reading this thing or listening to it, because I do audio voiceovers of all of these in here, is that our start date that we're doing all of this from was right here on December 10th of 2020. Shortly after the Dow Jones is breaking out into the all-time high. Same structure, same everything. So it's been pretty interesting. It'll be fun to test all this data and see how it does into 2023 and 2024. But if you're looking for some serious alpha to understand how the market was different in 2021 compared to 2017 and the performance of the altcoin market, to know only 2 out of every 10 altcoins in the top 100 and the top 20 and 30 really did anything significant compared to 2017, in which 9 out of 10 did. There did seem to be some particular data that influenced who had the ability to run higher into all-time highs and have bigger percentages. That's what we've been diving into here in 2023. I told you guys that would be my side project that I would work on. Did that by going to Consensus and meeting the guys over there from Electric Capital, then bringing the Santiment guys on here to give you all that data as well. Then, of course, looking at other aspects such as the percentage drawdowns and how that impacted returns, along with circulating supply, inflation increases. The one that will be released in the next 24 hours is trying to build the perfect 2021 portfolio based on that data available there. And then what would a portfolio in 2023 look like if we applied that exact same data to it today? That'll be released within the next 24 hours over here on blockchainbacker.substack.com. There are links to bcbacker.com and to blockchainbacker.substack.com in the description of each of my videos and live streams. Otherwise, guys, I want to wish you all a wonderful day. I'll see you tomorrow. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you are new to the channel, please subscribe and hit the notification bell so you can be notified when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.